The stock market did a 180-degree turn today. The Nasdaq was up over 1% for a big chunk of the day. And then suddenly I got a text from somebody that said, holy shit, the market just took a shit a bed. And I was like, wait, what? And I looked, holy cow. Guys, look at this heat map. Ironically, guys, look at our buddy Tesla. Keeping it strong there, Tesla. 1.6%, baby. NVIDIA down. Look at AMD down 8%. Market's not closed yet, but the Nasdaq is now down 1.3% as of this recording. And like I said, it was up over 1% earlier today. That's a 2.5% almost turnaround. That's a big number. Now, let me show you guys the intraday chart. So guys, around 2 p.m., something happened. Boom. Right there. Just collapsed. Now, some people were saying it's because Minnesota Fed Chair Kashkari, who is from Northeast Ohio, who we're trying to get on the channel. So I know he's probably a huge fan of our show, so please reach out to us. He came out and said that he expects rate cuts this year, but don't be surprised if there are none. Now, I don't know if that's what caused markets to fall, but this is quite the turnaround here, guys. These things don't happen very often like this. What does this mean? I have no idea. We've always talked about what we think about markets. We think to ourselves, look at this percentage for the day. The highest it got was about 1.16%. It's now down 1.18%. So it's about 2.37% turnaround. That's a big drop. On $1 million, that's $23,700 turnaround right there. So guys, this has been our new Everything Money 24/7 channel. So if you're new to it, please subscribe. This channel is dedicated to several videos per week, just making reactions. This happened. I came right down to our studio and started making this video, and it's out within half an hour. That's how committed we are to high quality, good content as it's happening. Now, for the day, what's going on in the markets? Still going down. Now, one big red I love seeing, American Express. I own some American Express. I want to buy more. It's down 2.85%. I love that a lot. But guys, look how rare the green is. Look at how rare the GE up. General Dynamics up. What other ones do I recognize here that are up? Not a whole lot more. Oh, Meta, of course. How did I miss Meta? Meta's up. The Googly Moogly down 2.4%. But the one I'm most excited about, the one that really gets my loins ringing, Nike, down 1.2%, 1.35% today. I have my watch list sub 85. Guys, Nike is a great company. A phenomenal company. Look at its all-time high, 179 on November 5th, 2021. This thing is down to 89 bucks. Guys, for those of you who aren't good at math, that's a drop of 50%. 50% on the world #1 sporting apparel company. If you loved it at 179, please tell me. I want you to write in the message below which family member you sold and which kidney of yours did you sell to go buy more money to buy Nike? I'm not telling you to buy Nike. What I'm saying is, if you loved it at 179, you bought it then, what the hell are you doing now at 89 bucks? You literally are calling the devil saying, please, what's it going to take to give me money? I need to buy more Nike. Now, do I think Nike is a screaming deal at 90? I think you're going to do okay or well with Nike at 90 bucks, but I don't think it's a slam dunk, obvious no-brainer. Remember, don't have the bias of seeing the all-time high of 179. This is irrelevant. It's a great way to start and say, wow, this thing is off 50% from its high. It's something to look at. But just because something is off its high doesn't mean it's a good value. If I went and listed my house tomorrow, let's say my house is worth $400,000. I listed it for $8 million and nobody bought it. I dropped it to $4 million. Does that make it a good deal suddenly? No. It's still a $400,000 house. Just because the market drove this price up so much doesn't mean it's worth it. Mr. Market is very fickle. And along the way up, he was very euphoric about Nike. He was like, hey, Nike, you're awesome. You're great. Keep going up. And people were like, yes, you're the best thing that ever happened. Let me buy more shares. But remember, on this channel, we're trying to teach people that when you buy a stock, you're buying a piece of a business, and every investment is the present value of all the future cash flows you'll receive. The more you pay for those cash flows, the less your return. The less you pay for those cash flows, the more your return. So when you figure out the right price to pay for Nike, you buy it when it hits that price. And if it goes lower, as long as your thesis is the same, you hold on to it. But remember, you make your purchase decisions based on the fundamentals, but you keep them based on a combination of fundamentals and emotion. You got to make sure those fundamentals are still there. They have to be there. But the emotional side is the hard part. Because if you bought Nike at 179, I know you're sweating bullets right now, and I don't blame you. I've been there. Peter Lynch has bought companies at 12 bucks that fell to 2 and shot up to 50. I have been there. We've all been there. We bought a company and it fell big time. The question is, when we bought it, were the fundamentals the right fundamentals? And more importantly, was the price we paid the right price for it? Because the emotional side is hard to see that big drop. And you're scared all along the way. You're sitting there worrying about it. And guys, emotional decisions do not lead to good results. Emotional decisions, most times you can think about it in your past. So I encourage you, check out our community. It's a great place to handle your emotions, get like-minded investors to help you out. So click the link below, $7 for 7 days to try out the community. That's exactly why I created it. I wanted a place where people could have like-minded people to fall back on and get support. But with Nike, God, this is such a great company. I'm excited for this to go down. I want to buy more of it. Let's see what the analysts are saying. Not more of it. I don't own it yet. And look at this, guys. Earnings per share, $3.62 expect this year, going to $6.33. Double-digit growth every single year, 10.7%, 18.5%, 15.9%, 13.5%, 12.2%. My Lord, a company that big can still grow its earnings double digits every year. Let's go to revenue. Not a lot of revenue growth. Yeah, actually, it's pretty decent, mid to high single digits. I was looking at 1 year here, going from $52.3 billion to $71 billion. That's a lot of growth. And I also love the fact that they're selling more direct to consumer. That's high margin. That's really high margin. And more custom stuff. You can go to Nike ID and buy custom shoes. You pick the colors, you pick initials, you pick all these things. It gets shipped to your door. You couldn't do that back in the day with Foot Locker. You couldn't do that at Champs. Now you can do this custom stuff and they make tons of money off of it. So what's the right price to pay for Nike? So guys, I did a 10-year analysis on Nike. Now for revenue growth, my low, middle, and high assumptions, I did 3, 5, and 7. A little bit lower than the last 10 years. I'm okay with that because as it gets bigger, it's going to be harder to grow. Now for profit margin, historically, they did between 10 and 11%. I put 10. I actually went a little bit higher at 11.25 and 12.5 because they do more direct consumer. I got to think their margins are going to increase. Maybe not, but I really hope that happens. Free cash flow margin, I kept the exact same thing. Even though in the last 10 years and 5 years, overall, they've actually lagged their free cash flow to their profit margin. And finally, for PE, guys, this is where investing is hard. The next two things, price to earnings multiple and free cash flow multiple, as well as desired return. What are you going to put in there? This is what makes valuation hard. This is what makes it an art. It's hard to figure that stuff out. So for PE, I put 20, 23, and 26. Same with price to free cash flow. Guys, if somebody said to me right now, no, Paul, I think it's 25. Yeah, I don't blame you. I don't blame you. I really can see an argument for paying a premium for Nike. Because who's competing with Nike right now? Who's competed with Nike last? Under Armour? Pshaw. No. I look at Nike. Guys, have you ever heard of a guy named LeBron James? Have you ever heard of Michael Jordan? By the way, for those of you out there who are questioning, I got a little secret for you. LeBron's the GOAT. It's not Jordan. It's LeBron. It's LeBron. So hate on me now. Hate on me now in the comments. But from a desired annual return, guys, I did 9% across the board. Because again, I don't want to do any sort of margin of safety here. I just want to show you what do I think Nike is actually worth. So 9% across the board. Remember, increase your desired return to get your margin of safety because we do need margin of safety in everything, but less so with Nike. Here are my values. 61 to 125, 89 in the middle. So we're almost at that price right now. Guys, on my watch list at 85 to sell puts. I don't need much margin for margin of safety, so I'm probably going to start buying sub 80, but don't do it just as I do. Guys, if you want to see what stocks I want to own, the other 29 stocks besides Nike that I want to own forever, check out our next video. And again, don't forget to join the community at the link below.